Welcome to the Private Property Podcast, where we provide you with valuable knowledge and information on anything and everything property related. Whether you're a first-time home buyer, a seasoned investor, or just looking for some expert advice, we have got you covered. All you have to do is tune in every Tuesday and every Thursday at 7 p.m. for tips, insights, and expert advice on burning topics related to property. This podcast is brought to you by Private Property. Remember, you can find your new home on privateproperty.co.za. Welcome. This is the Private Property Podcast. On tonight's episode, we're going to try and unpack and answer a rather interesting question. Should you apply for a fixed or variable interest rate when your bond is approved? We'll be looking at both the pros and the cons regarding this matter. And in doing that, we'll give you information you need to make a more informed decision. Joining me in studio is Mr. Julian Pick, who is the National Manager for Home Loans, Retail Credit Solutions and Pricing at ABSA Bank. Julian, thank you so much for joining me. Before we get into this conversation, I do need to remind you to comment below and share your thoughts about today's show. You can join the conversation by using the hashtag #FindYourNewHome on privateproperty.co.za and hashtag the Private Property Podcast on all social media. We'll be keeping an eye out for your posts, and we may even feature some of your comments on the show, because this is the Private Property Podcast, where we provide you with the most valuable information on all things property related. Like I said, joining us this evening is our guest, Julian Pick from ABSA. Julian, thank you so much for joining me. How are you?
I'm very well. So thank you very much for having me back.
Always
It's good to be
compliments. I heard you almost stayed in Cape Town. You went to Cape Town for December, and then you almost never came back.
Next time I might not come back.
Well, we're
Don't
glad.
tell my bosses. Don't tell my bosses, please.
There's remote working, there's semigration, there's all sorts of solutions.
True
And
that.
anyway, let's get into today's topic before I try and convince you of things that I shouldn't be trying to convince you of. Listen, let's get the obvious thing out of the way. Julian, what is an interest rate? What is a repo rate? What is a prime lending rate? Why are these words in the
Thrown
air?
around.
Yeah.
Let's start with the easiest one.
Yeah.
I think interest rate. So interest rate is the return an investor expects when he makes an investment. So you go to the bank and you say to ABSA, I've got 10 million rand, 10,000 rand, 1,000 rand, which I want to invest.
200 Rand.
200 rand, and you do that on a monthly basis. And ABSA then says, we'll give you interest. We'll pay you interest for investing the money with us.
Okay.
The flip side of that, if you're a borrower and you come to the bank and you say, but I want to borrow money from you for a home, a car, or a personal loan or credit card, the bank will then charge you interest. So that's interest rate in a nutshell. It's a return or the return or reward that you expect from your investment.
Because nothing is free.
Nothing is free. Repo rate, that's a rate at which central banks lend money to commercial banks. So in our case, South African Reserve Bank, we now heard about the prime rate, whatever the repo rate of whatever it is now. So that's a rate at which banks will lend money from the
Reserve Bank.
Right.
Okay.
Then the prime rate is the rate at which the bank then on-lends that money to you as a consumer, as a borrower.
Got you.
And the reason why that whole topic is so topical is because that when you hear about interest rate going up, it affects your pocket. Because if you have a bond over your property, if the repo rate go up, then it will be followed by the prime rate going up,
which will be followed by the interest rate going up
on your bond going up. So your bond is linked to prime, so mortgage bond rate. So if that rate changes, your rate changes. So let's say the bank initially agreed that we will give you mortgage bond rate plus 0.25%. So in the current market, you will pay 11% because prime, the mortgage bond rate is, or prime lending rate is a 10.75%.
Yeah.
So the 10.75% plus the additional 0.25%, so you'll pay 11%. Inversely, if a bank says to you, I'll give you MBR or mortgage bond rate less 0.25, then your rate that you will pay is 10.5.
Because it's that 10.75, which is the fixed number, minus now whatever they've said.
Yeah. So not really fixed, because remember, it depends on when interest rates move again. So that's variable. So that rate goes up as the Reserve Bank makes these announcements when they have sittings.
Okay, Julian, so I'm very interested in a particular thing that you've just said, because you've said then sometimes they'll offer you plus the 0.25 or minus the 0.25. I'm curious as to how they go about making those decisions, specifically related now to someone applying for a home loan. What are their options? What do these numbers mean? What is like a good deal? What is a bad deal? What should I be picking and going, yes, I'm winning in this situation?
Okay, so your rate is normally determined by first and foremost by your risk profile, and so your risk profile speaks to how well you're conducting your financial affairs, how well you're paying your accounts,
and your TV license.
Not the TV license, because that doesn't come up on the bureau, but all those things that come up on the bureau. So those are the things that kind of so banks, we use a scorecard, and it's models that's behind it that determines like. So it monitors and it tracks. It's really a behavioral scorecard. So it really says that if you have been a good payer in the past, the chances are that you'll continue to be a good payer in the future.
So we can trust you.
Exactly, that you will pay back the money.
Yes.
That we've lent you. So that's one aspect. The other one is also the loan amount. So we have different brackets depending on if you're buying in the low market, the mid market, or in the high bracket, high value ticket. So that will also determine your interest rate. And then lastly, is your loan to value. So how much are you putting in to a particular loan?
Okay.
You deposit your own contribution. That will also determine the amount of concession that you will enjoy from your bank in terms of interest rate.
So for instance, if you're saying the difference between my having a deposit and not having saved up for a deposit can now influence and affect
for sure
what I'm going to pay in the long run and the long term.
For sure, definitely. So the more you invest of your own money, it shows commitment to the transaction. The better your chances of securing a better rate from your bank as well. And then also depending on your relationship that you have with your bank as well, the product holding and so on that you have with the bank will also influence the concession which the bank ultimately agrees to offer you.
Julian, if I had the money, I wouldn't be coming to the bank to ask.
In the first place.
For the money in the first place. Now you're saying, yeah, put more of a deposit. I don't have the money, Julian.
So currently you are aware that we as ABSA Bank, we do offer up to 105%. And again, I'm saying up to, I want to emphasize up to. So it doesn't
It's not a guaranteed. It's not every time you go to ABSA Bank, they're going to say, hello, Sibs. Based on your risk profile and the fact that you haven't been paying your TV license and you've been blacklisted by the credit bureau, but here's 105%. That's not going to happen.
No, it's not going to happen. We are going to say to you, maybe get you sort your record out first and then come back to us again.
How long does it take to sort out records in your experience?
So again, like I said, so our scorecards are behavioral scorecards. So it can take up to between 12 and 24 months for depending on how bad you were as well on bureau. If you have judgments and defaults and so on, then it can take a while for those things to actually
What's a judgment and a default?
So a judgment is where you fail to pay your account, your cell phone account or your motor vehicle, and they follow the person who lent you the money then follows a legal process. You actually didn't get listed on as a they take legal action against you, and then eventually if you then still fail to pay, then it ends up as a judgment or default against your name.
And then now when I come to you at ABSA, then you're going to look at that judgment and say,
no. First, at your WhatsApp, you've been bad. But also let me also step back a bit. Life happens.
Yeah.
Life happens. So it could well be that you were unemployed or you lost your job.
Or it was a dispute.
Or it's dispute.
Yeah.
Okay, but then give us proof. that the dispute has been resolved,
Yeah.
or that you've entered into some level of arrangement with a company, the lender, to make sure that you eventually clear your debt. So yeah, we do look at it. It's not a total no, but we do take it into account. We do view that very seriously. Like I said, it is past behavior is an indication, not the best or not the only indication,
Yeah.
but it's an indication of what would happen with your debt going forward.
And obviously, financial habits that you've developed are hard to break if they show a consistent picture of behaving a certain way over a long period of time. So that makes complete sense. What I do want to ask you now is that, okay, here I am, I'm in the market, I've found the money to save up for a deposit. You've offered me my 105% because I'm great.
Right.
But now there's a fixed rate, and then there's a variable what?
So you remember I explained earlier on that the rate, the prime rate, is linked to the repo rate.
Yes, which is the central bank, the South African Reserve Bank, what it lends to ABSA.
ABSA,
Yeah.
or the other banks as well, right?
Yeah.
So now you've come into to ABSA and you say to ABSA, but I wanted one. So we agree. So a variable rate is the rate which is our kind of our default rate that we start off with. So that rate will be linked to prime. Okay, so that's variable. So it's either prime plus whatever, as I explained earlier on, or prime minus. Then you say,
the words are starting to make sense. I always hear plus prime, minus. Now I understand it.
Okay. Fixed rate, on the other hand, is so you have a view that interest rates at the moment is going to go much higher than what it is currently. So you come to the bank and you say to the bank, I have a view that interest rate is going to change it's still going to go up much higher than what it is currently. I want to fix my rate.
Because I might not be able to manage the
fluctuations.
Yes.
Because I
I can't predict it.
Exactly. If I have a view that interest rate is going to go up by 2%, let's say for instance over the next 24 months, then I'm saying I will then go to the bank and say, Mr. Bank, I want to fix my rate now.
Or Mrs. Bank.
Mrs. Bank. I want to fix my interest rate now. Then you would go and they would say to you, okay, we fix it. So you can fix it anytime from 12 months to 5 years. So the advantage, the one big advantage that you have with fixing your rate is you know what you're in for. Doesn't matter what happened to the repo rate. If it changes,
it's fixed as it is,
and that's a rate you'll pay. The disadvantage is that it's slightly more expensive. The banks is going to charge you a premium on the variable rate currently. So at the end of your fixed rate period, you will then default to the rate that you paid before. You will then default to the variable rate that you had before.
Yeah.
You entered into the fixed rate contract.
Got you.
So, yeah.
Which one must I choose?
So Sibs, you remember our conversation we had last year when I sat here, and I said to you that I have a sense that rates are going to go up, right?
And then when was it? A few days ago.
So I was supposed to be back here again, actually on the day, and I'm like, I don't want to be that guy.
I'm not doing it.
I don't want to be that guy again that
Yeah.
predicts that rates are going to go up.
Like, sorry, you guys.
Yeah. So yeah, and it did that again. So a personal view, I wouldn't fix now because I do believe that we're kind of nearing or at the end of the
peak
of the cycle. We might get another one in the next couple of months, but then that for me will be the last one, and then I think it will stabilize at that rate. And then towards the end of the year, the quarter 4 of this year, or either quarter 4 or quarter 1 of 2024, we might see interest rates, in fact, coming down. So a personal view is that I won't fix rates right now because, like I said, as I explained, I do believe that we should see that rate coming down in the foreseeable future.
Someone who doesn't have access to the information that you have and this kind of knowledge, and only just learned what a prime lending versus a repo versus an interest rate was. How do they go about making the best decision for themselves? How do they figure it out sort of without having to now phone Julian and be like, Julian, what are your predictions? Please help me today.
Okay, so I think one avenue that they could follow is obviously listening to your podcast, because I do believe that you do share valuable information, and so my first point is try and get as much information as possible. Fixing or not fixing a rate, I do believe, is a personal matter.
Yeah.
So it depends on your personal circumstances, where you're at. And again, like I said, if you have a view that after you've not done all your research and so on, that interest rate is going to go much higher than what it is at the moment, another 200 basis points, then I would say to you, then fix the rate. However, if you share the same view that I share, and the view shared by many economists and analysts, that we kind of towards the end, and again, there are some, counter arguments, if we continue on this trend with load shedding and slow growth and inflation not coming down, then we could see further interest rates, right? But all signs are there that interest rates are coming down. Interestingly, while I was waiting, I was reading an article where the International Monetary Fund were predicting, and they were actually saying that global growth, GDP, is in fact going to go up, and they've also predicted that ours is also going to go up. So yeah, but I think that's a view.
Love that for us.
It's shared by them. So yeah, I think it's a matter of, like I said, it's a personal matter. If you have a view that or you want to be sure, and I think that the other advantage, like I said, of a fixed rate is that what you're in for.
Yeah,
exactly, for the next 5 years. That is what I'm going to pay, irrespective of what's happening with interest rates.
So let me ask you this: can I change my mind?
You can't. You can change your mind, but you're going to pay a penalty. Yes, you can.
Would it be worth it? Said penalty, or is it just make your decision, stick to your decision, and live with it?
I think that's what the advice I would give. I think live with it, unless the rates fall so drastically. Then it might be worth your while to say, okay, let me take that penalty and
switch to the variable
rate again that I had before.
I'll ask you one last question before I let you go. No, I have so many more questions to ask you. But what I did want to say is so we were talking about saving money, putting money in, and then that makes things easier for you. I'm already now in this bond at this interest rate situation. Can I just keep putting money in? Maybe I get bonuses and stuff that I wasn't expecting, and then I put money in maybe to reduce my bond. Does that change?
So you actually know more than what you pretend to know about investing and this whole property. Maybe you must have decided.
No. You're the expert. You're the expert.
I must sit on the other side. So definitely that is an excellent way of actually saving. Is putting money, any additional funds you have, excess funds you have, put it in your bond. By doing that, you're reducing the interest charge, because remember, any additional money you pay into your bond goes off your capital amount. And so it reduces. Of
course, the capital amount being the 105, for example, exactly, that you've given me. Then I put money in that. Say it's 100 Rand, goes down to 95 Rand, which means there's less interest.
That you get.
Wonderful.
And in the end, you didn't bring down the term of your bond.
Because now it's not 35 years anymore. Maybe I'll bring it down to 25.
That's it. Brilliant. See, you know more than what you.
I'm so smart when I'm around you, Julian. I think it rubs off. I think you rub off on me. I look into your eyes and suddenly I have all of the answers. I have all of the information. What are the macroeconomic factors that can affect the fluctuation of the variable bond?
Okay, so our growth rate. I spoke about our growth rate. So how fast or how slow the economy is growing. The inflation rate, I think, which is quite topical in our sense. Government wants to kind of get it to the midpoint of the target range of between 3% and 6%. They want to get it to 4.5. I think we're currently tracking around 7.2%. So, but indications are that is coming down. The Rand exchange rate. So the Rand exchange rate. I spoke about the changes in our gross domestic product. Petrol price also has an impact.
The way I was queuing outside a petrol station last night trying to fill my tank.
Because the cost gone up 27.
Yes.
So yeah, the petrol price definitely. And then the last factor, I believe, is global events. like we had now with COVID. I think, economies just shut down because of people couldn't trade, they couldn't move around.
They can't work, they can't go places, they've got to stay home, they're unwell.
Exactly. So that all, it's all some of it is the most of the microeconomic factors that will impact the variable interest rate.
So one must always probably keep those things in mind.
Yeah.
So now you've got this bond with the variable rate, and you're always thinking, oh, the petrol price is going up. Oh my gosh. Okay, the dollar. Oh, it sounds very stressful, if I'm being honest.
Yeah. But we're living in stressful times, but I do believe that we are a resilient nation. Tough times call for tough people. I think as Africans, I think we've shown over the years how tough we can be, with these riots and flooding in KZN, inflation being so high, petrol price being where it was at, crime, corruption. We've actually
load shedding, water shedding. Let's not
go there.
Yeah.
But yeah, so those are the factors that definitely will have an impact on the variable rate.
Julian, as always, I appreciate your insights, and I hope to have you back when I have a deposit for. Can I have
deposit?
Yeah.
Save. When you get extra money, so when
how much must my deposit be, Julian?
So it varies on what you're purchasing. Normally we're asking for at a minimum, and again it also depends on personal circumstances.
I'm saying you as Julian. What kind of deposit are you saying I must put down?
10%, at least 10%, and then you can talk to me.
Okay, I'm talking to you now because I need a way to be able to make that 10% to begin with.
Come talk to me. We'll talk after this.
Yeah. Don't worry. In the comment section, I'll tell you absolutely everything that Julian said. Julian, thank you so much for joining me today. It's always a pleasure to have you on the Private Property Podcast.
And thank you very much for having me. It's such a pleasure to be back again. I really enjoyed it. Everything of the best.
Thank you. You as well. Happy 2023. Listen, that's all I have for you this evening. Remember to comment there in the comment section. You can even find us on Spotify. Did you know that? If you go on Spotify and you search for the Private Property Podcast, you don't have to watch this, but during load shedding, and now it's 4-hour schedules and you've got nothing to do, you can listen to this podcast and learn about interest rates and repo rates and lending rates and all sorts of rates. So do that. Otherwise, that's all I've got for you today. And I will see you on the next episode of the Private Property Podcast. I'm Sibs Matiela. Good night.